Nightly Business Report.
Good evening. Tonight, according to preliminary data from the Sri Lanka Tourism Development Authority, there has been a notable increase in the number of tourists visiting Sri Lanka, with over 44,000 foreign visitors registered in the first 5 days of February. Remittances from Sri Lankans employed outside have remained robust, contributing significantly to the nation's expanding external sector and consequently the overall economy. On the first trading day of the week, the market saw a downward trend, with the ASPI declining after previous week's advances. The S&P SL20 exhibited a comparable decline. And with most indices pulling back after new tariff announcements from US President Donald Trump, Asian equities have had a mixed start to the week.
From Studio 24, here's Sanuvi Mudanayaka.
Good evening and thank you for joining us. Sri Lanka has seen a significant boost in tourist arrivals, with over 44,000 international visitors recorded within the first 5 days of February, according to the provisional data from the Sri Lanka Tourism Development Authority. This marks a 20% increase compared to the same period last year, bringing total arrivals for 2025 to 297,054.
Sri Lanka has seen a notable rise in international tourist arrivals, with 44,293 visitors recorded in the first 5 days of this month. This marks a 20% increase over the same period last year, pushing total arrivals for 2025 to 297,054. The daily average of tourist arrivals has risen to 8,858. India led the way, contributing 5,823 visitors, or 13.1% of the total arrivals. The Russian Federation followed closely with 5,795 arrivals, also accounting for 13.1%. The United Kingdom ranked third, contributing 4,710 visitors, or 10.6% of the total. China and Germany ranked fourth and fifth, contributing 7% and 7.2% of the total arrivals respectively. This surge in tourist arrivals highlights a strong recovery for Sri Lanka's tourism sector. The continued growth in international visitors is expected to provide a significant boost to the country's economy in 2025.
Hambantota International Port achieved a major milestone in January 2025 by integrating high sulfur fuel oil into its bunkering services, alongside very low sulfur fuel oil and marine gas oil. This development positions Sri Lanka as a stronger maritime hub, catering to a broader range of vessels on one of the busiest global shipping routes. HIP's newly operational HSFO facility has a 6,000 cubic meter storage capacity and is equipped with advanced monitoring systems for safe and efficient fuel delivery. The port recently celebrated this achievement with the successful discharge of 5,000 metric tons of HSFO and 20,000 metric tons of VLSFO from the vessel Grand Ace 10. HIP's strategic location and expanded fuel offerings now provide vital refueling options for vessels navigating between Europe and Asia. Through its collaboration with Sinopec and certification by Lloyd's Register, HIP ensures high-quality marine fuel supply and operational excellence. Remittances from Sri Lankans working abroad have continued to be strong, providing much-needed heft for the country's strengthening external sector and thereby the broad economy.
Sri Lankans working abroad sent back $573 million in remittances through official channels in January of this year, reflecting a 17.5% increase compared to $487.6 million in January of last year. This comes after the country received $613.8 million in remittances in December of last year, capping the total annual remittances at $6,575.4 million, a 10.1% growth from the previous year. December typically sees the highest or second highest remittance inflows, with March and December being peak months. The rise in remittances could also be attributed to the large number of Sri Lankans leaving the country in search of better opportunities, especially due to the economic hardships caused by the pandemic. Over the past 3 years, at least 1 million Sri Lankans have migrated in search of work, including many professionals and educated individuals seeking improved living conditions. Sri Lanka is now targeting $7 billion in remittances for 2025, alongside an additional $5 billion from tourism. The recovery in both sectors following the pandemic has provided a crucial boost to the country's economy.
Sigiriya has been named the world's most welcoming city for 2025 by Booking.com, based on over 360 million verified customer reviews. The online travel agency highlighted Sigiriya as a must-visit destination for travelers seeking unique adventures, from scaling the iconic rock fortress to experiencing the peaceful village life. Located in Sri Lanka's cultural triangle, Sigiriya is a UNESCO World Heritage Site, renowned for its ancient urban planning and architecture. Booking.com also praised the region's rich culture heritage, including traditional batik, handicrafts and local textiles. In addition, the platform recommended a jeep safari at Minneria National Park, where visitors can witness the breathtaking gatherings of wild elephants. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The market experienced a downward trend on the first trading day of the week, with the ASPI following a decline after last week's gains. The S&P SL20 also showed a similar downward momentum. For further insights, we speak with Agnate Nakon from First Capital Holdings.
Thank you, Sanovi. Trading activity saw subdued performance at the Colombo Stock Exchange today. Even though the session started off with some positiveness, the ASPI witnessed persistent volatility and a general downward trend as the day progressed. The ASPI closed in red and stood at 16,566. So this marked a dip of 168 points compared to the previous session and marked the end of a positive two-day streak. Selinko Holdings, LOLC Holdings and George Keel's Holdings were the top three negative contributors to the ASPI. Sampath Bank, Selinko Guardian Investment Trust and Valuable One were the top three positive contributors. So it must also be mentioned that the number of negative contributors was nearly 3 times as high as the positive ones. So the turnover was also somewhat low, standing at about 2.1 billion rupees. This was around the same level as the previous session, if not slightly higher, but lower than the monthly average, which stood at about 5.9 billion rupees. So in terms of contribution to turnover, the banking sector took the lead with a contribution of about 29%. This was followed by capital goods and food, beverage and tobacco segments, which produced a joint contribution of about 33%. Thank you.
The market began the week with a loss following last week's positive performance in the ASPI and the S&P SL20. While there was downward momentum on the first trading day, the market's direction for the remainder of the week remains uncertain. For further insights, we speak with Ranjan Rantunga from First Capital Holdings.
Thank you, Sanvi. The Columbus continued on its lackluster activity levels as investors continue to adopt a wait-and-see stance, waiting for further direction from the upcoming budget. Going forward, we expect the same temperament to continue, recording relatively low turnover levels and mixed activity. The upcoming national budget for 2025 will be a key event scheduled for the month of February, and the first reading is expected to take place on February 17th. Investors are expected to be on a wait-and-see approach, waiting for more clarity and direction from the first budget of the newly elected government. Moreover, the IMF board is also expected to meet towards the end of the February 2025, and Sri Lanka's staff level agreement together with the budget proposals are expected to be presented to the board review. The board approval is also to be expected to be critical to receive USD 330 million for Sri Lanka, which will enable Sri Lanka to build for budgetary support as well as reserve building. However, despite the prevailing uncertainties, key economic indicators continue to recover during the period under concern, where we have seen interest rates continue to be below the 10% mark, while the corporate earnings have shown a mixed signals. Moreover, political stability and improving business confidence, with the latter reaching the highest since January 2020, are expected to support the interest on equity markets in the coming months. Thank you.
Gold prices surged to record highs today, driven by increased safe haven demand after US President Donald Trump announced new trade tariffs targeting commodity imports. Spot gold rose 1.1%, reaching a record $2,892.30 an ounce, while gold futures expiring in April climbed 0.9% to $2,916.05 an ounce. Trump's announcement also hinted at the possibility of additional tariffs this week, keeping markets on edge. Risk-driven assets retreated across Asia while the US dollar strengthened. On Sunday, Trump revealed plans to impose a 25% tariff on all imports of aluminium and steel to the US, fueling concerns about further disruptions to global trade. Additionally, he signals plans for reciprocal tariffs, meaning US import duties could be raised to match those of other countries. Oil prices ticked higher today as investors weigh the impact of US President Donald Trump's latest tariff threat on all steel and aluminium imports, which could dampen global economic growth and energy demand. Brent crude futures rose by 0.7%, reaching $75.20 a barrel, while US West Texas Intermediate crudes also climbed 0.7% to $71.50 a barrel. The market had posted its third consecutive weekly decline last week due to concerns over a potential global trade war. Trump announced that he would impose a 25% tariff on all steel and aluminium imports into the US, marking a significant escalation of his trade policy. Just a week ago, the president introduced tariffs on Canada, Mexico and China, though he suspended those tariffs for the neighboring countries the following day. The Sri Lankan rupee has appreciated against the US dollar in commercial banks today compared to last week. According to the commercial bank, the buying rate of the US dollar has decreased, while the selling rate also has seen a decline. Let's now take a closer look at how the Sri Lankan rupee is faring against other major global currencies. Short break now. This is the Nightly Business Report. Welcome back. Air, Sri Lanka's leading low-cost airline, has announced an expansion of its Colombo-Dhaka service with the addition of 2 new weekly flights. This move aims to enhance connectivity between Sri Lanka and Bangladesh.
Air, Sri Lanka's leading low-cost airline, has expanded its Colombo-Dhaka service by adding 2 new weekly flights, increasing the total frequency to 5 weekly flights. Previously operating 3 times a week, the enhanced schedule provides passengers with greater flexibility and convenience. The additional flights will operate from February 15 to March 29th, with departures on Tuesdays, Wednesdays, Thursdays, Saturdays and Sundays. Amar Kasim, the executive director of Air, emphasized the airline's commitment to delivering affordable, reliable and on-time travel experiences. He also mentioned that plans are in place to increase the frequency of 6 flights per week during the summer season. Air has been expanding its network, offering daily flights to Dubai and Malé, along with 3 weekly flights to Chennai. This growth reflects the airline's commitment to providing more options for regional travel.
Cedric Royal Jans has been appointed chairman of Lanka Milk Foods, bringing with him over 5 decades of experience in various sectors. A long-term associate of Harry Jayawardena, Jans has held leadership roles at DFCC Bank, the Sri Lanka Shippers Council and several Jayawardena-owned businesses. Jans is highly qualified, holding a diploma in banking and finance from London Metropolitan University, UK, and is a Chevening Scholar. He is also a certified training manager on maritime transport for shippers by the UNESCAP. Jans has specialized expertise in international trade, particularly in the movement and finance of goods. His extensive background makes him well suited to guide Lanka Milk Foods in its next phase of growth. Global apparel tech conglomerate MAS Holdings has once again secured multiple top awards, including the coveted Export of the Year at the 26th Presidential Export Awards for 2023-24.
MAS Holdings stood out at the prestigious Presidential Export Awards 2025, held at the BMICH in Colombo. The company won multiple accolades, including the top award of Exporter of the Year. Other notable awards included Net Foreign Exchange Earner of the Year and Best Exporter in Product Diversification. MAS was also recognized for its contributions to sustainable development, regional export supply chains, and emerging markets. CEO Suren Fernando credited the company's success to the dedication of 70,000 team members in Sri Lanka. The Presidential Export Award, organized by the Exports Development Board, recognized outstanding contributions to Sri Lanka's export sector. MAS previously won Export of the Year for both 2022-23 and 2021-22 financial years. This achievement highlights MAS's ongoing commitment to innovation and excellence. The company's success reinforces Sri Lanka's position as a leader in ethical, world-class manufacturing.
Virtusa Corporation has announced the appointment of Nitesh Banga as President and CEO, succeeding Santosh Thomas. Thomas, who is stepping down to pursue outside opportunities, will remain with the company as a strategic advisor during the transition. Under Thomas's leadership, Virtusa underwent a comprehensive transformation, driving operational excellence and making significant investments in personnel, technology, and commercial initiatives. He also led several strategic acquisitions and expanded the company's digital capabilities, resulting in record client and employee satisfaction scores. Nitesh Banga joins Virtusa from Global Logic, where he served as president and CEO, leading the company through exponential growth and its successful integration with Hitachi. With nearly 3 decades of experience in the technology services industry, Banga is well equipped to lead Virtusa in its next phase of growth. Sinopec Fuel Oil Lanka Private Limited has announced the introduction of high-sulfur fuel oil to the Sri Lankan market for bunkering, a move that is set to transform the country's maritime fuel sector.
This strategic initiative underscores Sinopec's commitment to customer-centric solutions, addressing a significant supply gap in Sri Lanka's bunkering industry. Currently, Sri Lanka faces a notable challenge in meeting the demand for HSFO due to the absence of offshore-based storage facilities at all its ports, including the commercial port of Colombo. This limitation has constrained local bunker supplies, restricting HSFO availability to small quantities and creating a shortfall in the market. The shortage affects the shipping industry's ability to secure reliable fuel supplies, impacting maritime operations and efficiency. Recognizing this urgent need, SFOL has taken proactive measures to enhance Sri Lanka's bunkering infrastructure by utilizing its storage terminal in Hambantota. Moving forward, this terminal will serve as the country's exclusive facility for HSFO, ensuring a steady and reliable supply to meet growing demand. This development marks a significant milestone in strengthening Sri Lanka's position as a competitive bunkering hub in the region.
SLT Mobitel, in collaboration with Sri Lanka Railways and the Department of Pensions, has integrated the pension warrant process into its state-of-the-art M-Ticket platform, allowing pensioners to enjoy a seamless railway transport experience. The digitalization of the pension warrant was launched at the Colombo Divisional Secretariat with senior representatives from state institutions, Sri Lanka Railway, the Department of Pensions, and SLT Mobitel. Previously, SLT Mobitel's fully fledged digital system enabled the public and government servants to reserve train tickets online via e-tickets and e-warrants. Now, pensioners can also book train tickets conveniently from home through the user-friendly digital platform. As a national ICT solutions provider, SLT Mobitel takes pride in offering digital solutions that serve the nation's pensioners. This initiative reflects the company's commitment to digital transformation and appreciation for the years of service pensioners have dedicated to the country. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks held a mixed start to the week, with most indices retreating following fresh tariff announcements from US President Donald Trump. However, Chinese shares extended their rally on optimism surrounding AI and hopes of fresh stimulus after weak inflation data. US stock index futures were higher during Asian hours, providing some support to the market. Meanwhile, China's retaliatory tariffs on US goods set to take effect later in the day added to the subdued sentiment. In South Korea, the Kospi dipped 0.1% with major steel producers like POSCO Holdings and Hyundai Steel seeing notable declines. Japan's Nikkei 225 and Topix also edged lower by 0.2% and 0.3% respectively, while Australia's S&P ASX 200 index dropped 0.4%, largely due to losses in the mining sector. Porsche shares tumbled 7% in the biggest drop among European firms and marked its worst day since listing on the stock market. The automaker said it will take a $832 million hit to profits as it launches new combustion engines and plug-in hybrid models.
Porsche shares took a wrong turn Friday and tumbled 7%. It was the biggest drop among European firms and marked its worst day since listing on the stock market. Porsche shocked investors with a statement late Thursday it expected a profit margin of just 10 to 12% this year. That was well below analyst expectations and under its midterm target. One analyst called the margin forecast a major concern. They added investors will expect further explanation from management ahead of full-year results in March. The luxury automaker said it will take an $832 million hit to profits as it launches new combustion engine and plug-in hybrid models. Porsche was valued higher than its parent company Volkswagen when it made its stock market debut 3 years ago. But it's struggled to live up to that since then as EV sales have struggled to get going and it's endured weak Chinese demand. Shares slumped just over a quarter last year. The company said last week it was in talks to end the contracts of its chief financial officer and sales chief early. That after both were criticised for Porsche's poor performance and weak share price.
Amazon.com investors drove shares down sharply due to weaknesses in the retailer's cloud computing unit and lower than expected forecasts for the first quarter revenue and profits.
Amazon shares tumbled as much as 5% in after-hours trade on Thursday. The drop came after the e-commerce titan reported numbers that didn't go down well on Wall Street. Amazon's cloud computing unit reported growth of 19%, falling short of estimates. Chief Executive Andy Jassy said problems with the supply of computer chips were one factor holding back expansion. But rivals Microsoft and Google have also reported weak cloud numbers, and investors are getting impatient for returns on all the investment in the technology. Much of that money is going on AI systems, but there too investors are wondering when a payback is coming. In December, Amazon tried to offer reassurance, showing off new AI models that it says will draw business and consumer customers. Later this month, it's also expected to release an AI version of its Alexa voice assistant after repeated delays. Amazon's sales estimate for the coming quarter also disappointed. The company predicted first quarter revenue of up to $155 billion, or some $3 billion below average analyst expectations. Now the retailer may also face a challenge from Donald Trump's trade policies. He's scrapped the so-called de minimis rule that exempted low-cost packages shipped from China from import duties. Amazon's haul service had been set up to exploit that provision and compete with fast-growing rivals like Shein and Temu. On Thursday, there was no comment from the company on whether it expected to take a hit over the change.
That's all from us on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates in the business globe. Until then, I'm Sunny Mudanayaka. Thank you for watching and have a good night.